Hello everyone, welcome to the ichimokocharts.com daily analysis for the SP 500 for Tuesday, September the 14th, 2010. Well, a continuation of the trend to the upside today, and we have a candle with a higher high and a higher low, so we have the market in a first time frame uptrend. Unfortunately for the bulls, a lot of the power that they've had over the last trading week has evaporated in this candle. We now have a doji type candle, and that warns very strongly of a potential change of trend. Doji type candles are very indecisive, and that's because we have the market opening and closing roughly in the same area, and that forms this cross type pattern, and we also have the long shadows on the tops and the bottom. So the open and the close within the same area means that neither side, the bulls nor the bears, made any significant net bullish nor bearish progress on the day between the open and the close. And we can look at that in contrast to the previous candles here, where we had some moderate sized green candles where the bulls were in the ascendancy, and then quite a large green candle here the previous day where the bulls made some very strong net bullish progress. Today all of that has evaporated. And we also have this strong downside price rejection on the top, as evidenced by the strong wick on the top of the candle, but also on the bottom we had buying coming in as the market traded down to around these lows. So that's what makes this candle very indecisive. The fact that it is a potential reversal is once again because the power of the bulls, that net progress that they've been making previously in this first time frame uptrend, has disappeared. Now, with this potential for change of trend comes the warning that we do need evidence of that change of trend. So the market is still in a first time frame uptrend. We do need a candle with a lower high and a lower low to confirm that change. So that makes the low of the current candle very, very important. So that low is roughly around 11.15 or so. So that low will need to be taken out with a lower high and a lower low. Now, in candlestick terms, this is also a potential Japanese harami cross reversal pattern, and that's where the body of the current candle is completely within the body of the previous candle, and because it's a doji, we call it a harami cross. So there also is strong potential for a change of trend, but we do also require confirmation of that. Now, one thing that may limit this change of trend to the downside, if it does occur, is the window that's been opened here previously. And we can see we have this gap between the candle from 2 trading periods ago and the previous trading period, and that has potential to offer very strong support for this market. So if the market does come off, there is potential for good support there. Certainly down to around 11.06 there's potential for support, and down around this area where we had this previous major swing high and the previous tweezers top, roughly about 1100, just slightly above that area. So a round number as well, there is potential for that to hold a support. And then certainly we have the cloud all the way down through to around 1069, which will offer very strong support. And in between the cloud, just at the top there, we have another window that was open that may offer potential support. So a lot of support down below this market if it does sell off. So that does tend to put the strength of this previous uptrend in perspective. So we may not be looking at any major sell-off if the trend does change to the downside. To the upside, we do have some resistance. There is resistance fairly close by, leading up to around the 1133 region. So there is potential for resistance. Now, we do say that because even though we do have this potential reversal pattern and the doji, the market may still continue trending up in a first time frame uptrend. And that's the thing that overrides everything well, not overrides, but it's more important that we determine trends rather than look to potential changes of trends. So the trend is still up in the first time frame, and we need evidence of a change of trend before we actually trade that change or potential change of trend. Now, with the other Ichimoku indicators, the market is trading up above the cloud, so we do have the market with an overall positive bias in the long-term time frame. In the medium-term time frame and short-term time frame, the market is also positive, bullish, because we are trading up above those two indicators. Now, the market is trading a fair way up above those indicators, and it is looking a little bit overstretched, certainly in terms of the fast-term time frame, the Tenkan-sen, which is the green line. There is potential for the market to try to revert back towards that mean. So, and that's basically what the Ichimoku indicators are. They represent the mean of trading within a particular time frame, and we know that markets act like rubber bands. They'll move away from the mean and then they'll revert back towards the mean. So there is potential for that to happen. Also with the Kijun-sen, there is potential for the market to retrace back towards there, and this Kijun-sen has been flat for quite some time. Quite often when the Kijun-sen is flat, the market price action tends to be attracted back towards there, and that's what's happened previously when the market was trading down around the 1041 support level. The market was attracted back towards there very quickly, but traded through there just as quick. So now there is potential for the market to trade back up towards there. So basically, over the next trading day, the low of the current candle becomes very, very important for this market, and certainly just below there, the window for any potential change of trend. But we do still need to watch the high for a potential continuation to the upside.